Morning, ladies and gentlemen, boys and girls. This is once again Pillai in Toronto. Today is Tuesday, the 22nd of October. When I look at the markets today, what happened was something that was not predicted by anybody. The reason is that the market on 27th of September hit a high, all-time high, 26,277. After that, there were 6 days of a continuous fall. It reached on 7th of October at a particular figure, and then it moved up slightly again, and then we are back again down. So there are two things. One is we had to know the fundamental reasons for why this is happening, and then we also have what I explain as technical charts to support the fundamental reasons. So both, when they match, they are fine. If you recall, on the 7th of October, I had put up a chart showing you Fibonacci analysis, Fibonacci retracement tool. And there, markets on 7th of October had already touched a sort of a bottom of 24,700. And the next level then was the 100-day EMA, which is 100-day exponential moving average, which at that point of time was around 24,400. Today what's happened is the EMA is a 100-day past exponential moving average. So every day it's a dynamic number. It kind of moved up, and on today, on the 22nd of October, it has actually come out in the region of about 24,700. And today the markets actually Nifty 50 closed even before that. The situation is somewhat quite bleak, because now what's happening is, will it touch, first of all, the 78.6%, which is much lower, or the 200-day EMA, which is even lower? So these are some of the speculative thoughts that everybody is having. Enganeyana markets ponada. I think has it fallen enough? But so fundamental reasons remain the same. Global markets are at an all-time high, which are pretty much high, and India is behaving a little differently. There is, of course, this China Luru. There is a stimulus package announced by the Chinese government. So foreign institutional investors are withdrawing money from here and going there. There was a Hyundai IPO, which was a massive one. A lot of money from local investors have gone into that IPO, and so on and so on and so on. They can keep on giving reasons for all this. But the markets were not because India is supposed to be a resilient, positive economy. Our GDP growths are quite okay. Things are fine. Also, there was this factor of the corporate quarterly results. That has not been supportive at all. Started with TCS and went down. Reliance was not good. Bajaj Auto, all these big heavyweights announced results which was not as per street expectations, and therefore the bears took control of the situation. As I told you earlier, we should have some cash on hand. Difficult to say, because as I also had some cash. Partially, I bought something which has again gone down. So we are in a situation. What we need to do is understand what is the bottom. Where are we? Are we reached? Is there the market going to take a turn? I think now is the time to be cautious, because there is another technical formation on the charts, which is called head and shoulder formation. I will put on a chart for you so that you understand. And if that comes into play, which we will know only maybe in a couple of days, that comes into play, then the markets are looking at somewhere much lower than what we are, at least a 500-600 points more correction. And if that correction happens, then we can sort of take the markets, assume that the markets have corrected now finally, and things will move up, because the festival of Diwali is around the corner. Generally, it is a very positive festival, and everybody is kind of celebrating all over the country, and markets also celebrate that to some extent. So this year is Diwali going to be a red Diwali, as I would call it, because things have not looked up at all. A correction was expected. So let's be very honest, correction was expected. But now the correction was not thought of to be so severe. So now we are almost at the bottom, but another 200-300 points cannot be ruled out. So be very careful. You still today, I don't think. Yesterday I saw all stocks going down. In fact, all indices have also dropped 3 and 4%. Mid cap index, where I play, is also down yesterday massively. So basically, overall there has been a sell-off, which is leading to this situation of kind of panic. Now it can further go down. Yes, it can. So we have, today is Wednesday, so you have 2 more days of the week. I don't think this week will be a very positive week for the markets. I don't think it will recover. But even if it recovers, one has to be careful. Sell what you have, sit on cash, because you might get a much better opportunity in the coming week. Thank you very much for watching this video. I hope I have given you a broad sort of explanation. You need to understand why it happened, the fundamental reason for this fall, and then you need to broadly define it into technical charts and think, has all the factors which the why has defined been factored into the chart actually. If that has been done, and you can do it, and it's a very dynamic thing and not easy at all. It's very easy to do a post-mortem, but when you do it live, you can go wrong, as I was. So I mean, not only me but everybody else as well. So therefore I feel that it is important to wait and watch again and see how we can take it from here. Thank you very much for joining. Please like and subscribe so that I can make more videos like this. And 2 things you need to do. I hope you learnt about and studied about the Fibonacci earlier. Then I told you about the Marubozu, which was a bearish Marubozu. This is after that, and now I urge you to learn about the third candlestick chart pattern that I talked about a little earlier, which is the head and shoulder pattern. Type on Google head and shoulder candlestick pattern. Everything will come, and you will learn, so that next time it happens, you can also sort of spot it. Thank you very much for joining. Bye bye. Have a wonderful day.